Today, we're exploring the three of the most profitable trades ever made, revealing the masterminds behind them and the strategies that turned these trades into legendary financial victories. Let's start with a story that sounds almost like a financial fairy tale. This trade involves George Soros, a very famous investor. Back in 1992, Soros made a huge amount of money by making a smart guess about the British pound. He believed that the pound was in trouble and would lose value soon. How did he come to think this? Well, at the time, the British pound was tied to other currencies in Europe by something called the Exchange Rate Mechanism, or ERM. This system was supposed to keep the value of currencies stable relative to each other. However, the British economy was struggling, and it was hard for it to keep up with stronger economies like Germany's. Soros did a lot of homework. He looked at the British economy and saw that it was under a lot of pressure. He thought it was only a matter of time before the British government would have to either lower the value of the pound or remove it from the ERM. He decided to take the risk. He bet that the pound would lose value and basically shorted the currency. When a person shorts, they are saying, "I think this will go down in value." Soros borrowed pounds, sold them at the current high prices for other currencies, and planned to buy them back later at a lower price. This way, he could return them and keep the difference as profit. And guess what? Soros was right. On a day that later became known as Black Wednesday, the British government couldn't keep the pound in the ERM anymore. They had to let its value fall. When this happened, the value of the pound dropped quickly. Soros then bought back pounds at a much lower price than he sold them for, making over $1 billion in profit. He was held personally responsible for the currency crisis by many. However, several committees were unable to prove that his transactions had caused the fall in the value of the pound. Soros made this trade based on careful study and understanding of the economy. He saw something many others didn't and was brave enough to act on it, which is why this trade is one of the most famous and profitable in history. Another individual who placed a risky bet was a man named John Paulson, who was not as well known as some big investors at the time. Paulson made a fortune by predicting a big problem in the U.S. housing market. In 2007, while many people thought house prices would keep going up forever, Paulson saw a disaster waiting to happen. He looked closely at the housing market and noticed something troubling. Many of the loans that people were taking out to buy homes were subprime mortgages. These were loans given to people who might not be able to afford to pay them back. Paulson believed that too many of these risky loans were bad news, and that it was only a matter of time before many borrowers would start missing payments. To bet on this idea, Paulson used something called a credit default swap, which is kind of like insurance on bonds that are based on these home loans. By buying credit default swaps, Paulson was betting that many homeowners would fail to pay their mortgages. If this happened, he would make money, just like you'd collect on an insurance policy if something bad happened. Paulson and his team spent a lot of time analyzing data about mortgage-backed securities, which are investments that are tied to the payments people make on their home loans. They believed that these securities were much riskier than most people thought. Their research wasn't a simple guess. They looked at the quality of the mortgages, the risk of the loans defaulting, and how these securities were being traded. Paulson's prediction required bravery and a deep understanding of the market, as he was going against the common belief at the time. When the housing market crashed and many people couldn't pay their mortgages, the value of mortgage-backed securities plummeted. Because Paulson had bought so much insurance with credit default swaps, his firm ended up making about $15 billion from this crisis, with Paulson personally earning almost $4 billion. This trade became famous not just because of the money he made, but because he saw the crash coming when almost no one else did. Let's move on to the story of Louis Bacon, the founder of Moore Capital Management, who made a huge profit from a global event that shook the world, the Gulf War in 1990. Bacon was not just watching the news, he was seeing opportunities where others saw chaos. In 1990, when Iraq invaded Kuwait, it triggered a major international crisis. Kuwait was a small country, but it was very important globally because it produced a lot of oil. Bacon understood that this invasion was likely to cause big problems for the world's oil supply. Why? Because both Kuwait and Iraq were major oil producers, and war in this region could seriously disrupt their oil production. Expecting that oil prices would skyrocket due to this uncertainty, Bacon decided to make a big bet. He bought what are known as oil futures. These are contracts to buy oil at a set price on a future date. By buying these contracts, Bacon was betting that the price of oil would go up. If he was right, he could sell these contracts later at a higher price and make a profit. But this wasn't just a wild guess. Bacon's decision was based on careful analysis of the situation. He looked at the political landscape, the history of conflicts in the region, and their impacts on commodities like oil. His ability to understand and predict the effects of geopolitical events on the markets was key. When the conflict caused oil prices to rise as expected, the value of Bacon's futures contracts soared. He ended up making over $1 billion from this trade. This wasn't just good luck. This trade is a classic example of how global events can impact financial markets and how a well-timed and well-researched bet can lead to enormous profits. Louis Bacon's success shows that being informed and ready to act when the time is right can make all the difference. Thanks for watching. If you liked the video, please consider leaving a like and maybe subscribe to the channel if you are interested in these kind of topics. Have a good one.